Cam Rowe for Cam's Mortgage Minute on Monday, November 26th. Hey, tenant screening is an important process towards all rental agreements, but if you're going to enter into a rent-to-own situations, the tenant screening is vital because, you know what, let's face it, the tenant is the exit strategy for you. I mean, that's the bottom line, and the finding the right tenant for this type of investment is obviously going to be the key to success. So there are 5 things that you should consider when you're doing due diligence for tenant buyers in a rent-to-own scenario. Number 1, recognize who makes a good candidate. Some people are better tenants and for this type of investment than others. Try to focus on people that have got credit challenges because that definitely helps. Newcomers to Canada who can't qualify for traditional financing. These are folks who definitely want to be buyers, they want to be owners. Folks who have damaged credit in the past, some of them are really on a tear to try to reestablish themselves, get themselves in a better position. And also those who are self-employed recently. As you know, a lot of the rules now, unless you've been in a related industry, we need 2 years history to make that self-employment model work. So these are folks that are ideal candidates for the situation. Make sure that the property is one you could keep. Number 2, that's very important if the deal goes bad. Bottom line is you need to have multiple exit strategies. We know that the tenant buyer is your primary strategy, but have a secondary or third strategy. In that same vein, I mean, it might be wonderful to have a property that's a rural, pristine setting and try to find a tenant buyer for that. But again, if that person decides not to exercise that option, that may be a very tough property to certainly be able to sell in the end. Because not all these deals come together. Sometimes these things fall apart and the tenant is gone and you're left with the property trying to find another buyer for it. Check references. That's right. Financial, personal, and professional. That's where we as brokers come in if you're trying to enter into a rent-to-own situation. You know what? Any clients that I have that try to do those sorts of things, I encourage them. I said, get the people in touch with me. I'm happy to check their credit, at least give you some idea of where things are at, and then at least I can give you a position on that sort of thing. And the other thing is you have to make sure that when you're checking references, you know what, be careful when you're checking basically landlords and previous landlords or even current ones, because they're not necessarily unbiased and accurate testimonials. Under the rules, sometimes people won't say anything because of fear of saying anything. So you really got to do a little bit of due diligence. And you've got to, and typically the guy who's going to approach you that wants to become an owner later is already going to do some screening on themselves as well, just to start off. Make sure the buyer's make sure that the buyer's option to purchase price is clear and is agreed upon at the beginning. You have to know your market. So the bottom line is, whatever terms that you guys all come to terms on, you have to be really careful and mindful and basically make sure it's going to work for everyone. It can't be just something where you're going to hope to hit a home run and make a fortune, because the folks are never going to qualify for the financing perhaps, or you may obviously want to be really careful not to sell too low. But in this sort of a market, it's pretty challenging because nobody knows going forward, so you might have to come up with some kind of a creative idea around it. The other thing you really have to be careful on and stay in touch with is communication. You may enter into a rent-to-own scenario and maybe it's not completing for 2 years or 3 years. That doesn't mean that you don't stay in touch. You should be looking at regular, let's say, it doesn't mean that every weekend you're going to be visiting them and watching football with them. But bottom line is that every quarter or so you should be getting out there, look at the property, because at the end of the day, you still own it until it closes and it's still your investment. So that's a very important step. So again, recognize who's a good tenant, make sure the property is one you would keep if things go sideways, check references, make sure the buyer's option to purchase price is clear, and communication, stay in touch with the folks once it's closed. So those are just 5 general ideas. They should be helpful. So if you're a landlord contemplating entering into one of these, please let me know. It's Cam the Mortgage Man. You can call us at the Auxilium team. We're always here and happy to help. And if we can provide you some advice, we certainly will. Anyway, hopefully this one's been informative. I'll see you tomorrow.